thanks to everyone for joining me for this morning's presentation. We are going to navigate through basically adding assets to a tax return. But first, it's worth mentioning how we prepare a tax return, some of the methodology that's involved in this. The first thing we want to do when we start a tax return is fill out the client data worksheet. We enter all the personal information, and all of that flows into the rest of the tax return. So we don't end up typing names and addresses and phone numbers and those kinds of things over and over and over again. Once we get the client data worksheet filled in, we can add our income source forms, our W-2s, W-2Gs, 1099s, any of those that report our income, we add those. Now, this is important because largely the methodology here is forms-based, and by that I mean we want to add the form before we enter information, and that again becomes important when we do our third thing here, which is add all of our secondary forms, our state forms, and our schedules. Our assets are written off to our schedules, so we need to make sure that we add those forms before we add any asset to CrossLink. Once we fill in their personal information, we get their income source forms entered and any secondary forms, then we can move into the end process, verify, sign, print, and submit to the IRS. So this is kind of where we're at in our scenario right now. If I take a look at my tax return, here we are in CrossLink, and I'll open up the return I have prepared. All right, here we are. So inside the return, here's our client data worksheet. So this is where I'm going to perform all my actions, basically. And along the left-hand side is our attached forms list. So you can see everything that's attached to the tax return is going to be attached over here. And I point that out because we can see that I have a Schedule C. And if I double-click on this, I can move over to that Schedule C. And here it is. So our scenario is basically a single entrepreneur type. He's got his insurance through his private health insurance company. Doesn't have any dependents, so nice and easy as far as that is concerned. We do have a Schedule C, so we have 45 in here. We don't have anything written off just yet, and we do have a Schedule E in here as well. So we have a couple grand in rents received, but again, nothing to add as far as assets yet. So we're basically at the point where we can enter that. I've taken all my images of documents and put them in the document archive. Everything is taken care of as far as that's concerned. I also want to point out that there is an interview mode, this return interview here. This is new for this year, and you can take care of some, I don't want to say everything that's available on the form, but there are a lot of different things that you can take care of through here. Adjustments, let's just kind of jump over here. So we can see we have $670 in state sales tax there. So we can enter a whole bunch of different kinds of stuff, even through the return interview mode. Let's take a look at adding some assets. Okay, so here we are in my Schedule C, and I have landscaping, and I have a Schedule E for my rental property. And there's a couple of different ways to get into this depreciation. The first is in the attached forms list. You can just double click on depreciation here, and it'll take you straight to where we need to go. And you can see there's our Schedule C and our Schedule E. They appear here because I've added them already. If I didn't have anything there, it wouldn't be here. So I only have one Schedule C. Just as an example, if I add a second one, just real quick, a new one. Now when I go into depreciation, we can see there's another Schedule C. I didn't name it yet. But those things don't appear there. Well, we can't write anything off to forms that aren't already added in there. That's kind of the bottom line here. So let me get rid of this one. We'll go back to the way we were. And again, we can click on Add Form and notice depreciation is a tab in here. There we are, we can get there. And the other way is to just hit Control-N on your keyboard. Control-N takes you straight to this spot. So if you're used to using your keyboard, go for it. Now we have our schedules shown up here, but we also have one called car and truck. I'll get to this here in a minute, but just at this point, understand that there's basically two different kinds of assets for CrossLink. One is more or less a standard asset, and the other is a vehicle asset. And the reason we separate the vehicle out is we can write the vehicle off to multiple schedules. That's why I have two schedules in here. So we'll get to that here in a minute. Let's look at a regular standard asset, and we'll go and just double click on my Schedule C, and here's the list of assets that are for this particular Schedule C. So if you have multiple added, the lists may be different. We'll click on Add Asset at the bottom, or New Asset. Here we can type in a description of the asset. So we'll say something like a desk. Why not? Our date placed in service. I'm going to leave this here, but you can adjust that date placed in service. And this has a bearing on some of the controls later on. I'll point that out. Once we get our description and date placed in service in there, we can choose which ones of our little IRS codes apply. And it looks like it's going to be furniture and fixture for this one. So I'll double click on it, or you can click OK. And here we are. So we have our furniture and fixture code in here, our desk description, our date placed in service. Any time that you want to add a sale or casualty or out of service, those tools appear at the very bottom here. We can see those buttons: out of service, casualty, sale. Delete asset is important. I'll show you some of the stuff in here. And if you want to get to bonus depreciation, there's a button down here. But when we're in here, all that's left is to add a cost for this desk. So $1,500. It was a nice desk. That's done. We can click close. Our bonus depreciation pops up. If you want to elect out of it, then you want to check this box. So be careful what you're marking here. I'm just going to leave it. Click OK. And there we are. Here's the list for that Schedule C. And if I return to list, and then let's take a look at that Schedule C. Scroll down a bit here. Oh, there's our depreciation, all calculated out for us. So let's look at that again. Just a standard asset. If we go to depreciation, I'll double click. And let's do a Schedule E asset this time, just for fun. Unnamed asset in here. Oh, it looks like I already have my rental. I just didn't name it. Res rental. So we have a little house in there. It looks like $500,000 house. Just close. Return to list. There we go. Here's our Schedule E. There it is. All right, so now let's take a look at this vehicle, because these can be a little more problematic, if you will, just the way it works. And if you don't know what to expect when you come in here. The first being that we can split a vehicle between these two schedules. So if we double click on vehicle, new asset, just like before. Now notice we can enter, just like before, we can enter our code, or our description, our date placed in service, but our codes, we don't have as many. So we don't make you wade through all the farm animals and furniture and fixtures, because we know we're dealing with a vehicle here. So special use, electric, we'll say it's a light duty truck. Oh, and look, it's a bit different in this one. We still have that original cost or basis in our section 179. We still have the out of service, casualty, sale, delete asset. All that stuff is still here, but we have more tabs, a miles and expenses tab. Now, one thing that happens when we get in here is we get a little excited and we want to enter our miles right away. And we'll click on this tab and it'll give us an error message. Enter a cost basis. If this is an invalid asset, delete it. So we have to enter the cost before we can move on to mileages and expenses. And the other thing is, what if we're doing a standard asset and we accidentally clicked on the car and truck? How do we get out of here? If I click close, it wants me to enter that cost basis. It won't let me out of here. That's one of the things that makes you feel like you're stuck in here and that maybe this isn't working the way it should be. All we're trying to do, if you read this here, is enter the cost or delete the asset if it's invalid. So we'll click this delete asset button down at the bottom. Oh, you want to delete it? Are you sure? Yep. Now we're out. Let's go back in there real quick. Light duty. Okay, and we already know that we need to fill in our cost basis. So let's do one for 25, right? Notice our state is automatically entered. And that goes back to that methodology. If you start with your client data, you move into your income source, and then go into your state and assets and things really start to fill themselves out as you go through. So this is one of those examples. We're helping you out with the state there. Now, we may be still very excited about entering miles and expenses, and we've entered our cost basis, and we're not going to delete this asset. So let's click on miles and expenses. Oh, hey, I got this error message again. Well, wait a minute. This isn't the same error message. Please answer all questions. It's not cost or basis. It's talking about these questions down here. So I have to answer these questions, and I have to enter a cost basis before I can move on. So let's take a look at these questions. The reason for this is these have a bearing on how this asset is going to be depreciated, how it's going to be calculated out. So we need to answer, do we have, was it available for personal use? Yeah, we maybe picked up the kids or went to the grocery store in it. Used 5% owner, sure. Is another vehicle available? Yeah. My wife drives the car, or however that looks. Do you own this vehicle? Yep. Now we get to these two questions here that have this word force on them. Force actual or force standard miles. So what's happening is if you say yes to one of these, it's going to force that calculation. So if I want to force actual expenses without having to worry about standard mileage at all, I'll just say yes to force it. Let's do this one. If I say yes to force standard miles and we won't force actual, then it's not going to look at actual expenses. However, here's a little trick. If you say no to both of these, say no to both forced questions, we don't want to force either one of these. What we want to have happen is the program figure out the best way. We'll enter both, and then the program will say, okay, actual expenses gets them a bigger refund or makes a bigger difference as far as their balance due is concerned. So what I'm going to do here is I'm just going to leave it up to the program. We'll enter both. We also have makers and acres down here. And this one, the question is, a lot of times, is why can't I select it? This has to do with a previous year. Notice I put this date placed in service this year. So there really isn't a previous year on this. That's why this is grayed out. If we play around with the date in here, we could then make a choice here if it were an older asset. Okay, so I entered my cost. I answered the questions. We're not going to delete it. So can I click on miles and expenses? All right, so we made it. And if you look around, we have our miles that we input up top. We have our schedules here. Notice both of them are listed just like over here. And then we have our actual expenses at the bottom and our due diligence questions. So starting at the top here, total vehicle miles. Let's just keep it nice and easy and roundable. We'll say 10,000. And commute miles. we'll say 2,000. You know, we commuted, average daily commute. Now you can enter both of these. You can enter one or the other. It's really up to you what your comfort level is. I always like to enter as much information as I can, so it's up to you. You know, 36 miles both ways, doesn't matter. All right, now landscaping and my rental property, right? So now I have my miles. How many miles did I drive, right? So we'll just split it evenly, 5,000 and 5,000. And then since we didn't force either one, actual expenses or miles, we'll go ahead and enter some parking tolls. Man, some of these tolls can get outrageous. Let's make it 18 grand, why not? And we'll also say, hey, we have written evidence of this. It's not something that's, you know, on an ether or a guess or any of that. We actually have logs and those kinds of things. And at this point, we're done. So we can click close, right? There's our bonus depreciation. Oh, another error message. And this is a third one. Total mileage amount entered is less than business plus commuting. So again, this might be a little cryptic, but what's happening here is I've written off more miles than I am supposed to. Notice this adds up to 10 grand, but I said I commuted. And we don't get to write off these commuting miles, you know, we don't get that. So I have to adjust my miles here. So we'll say 2,000 for my landscaping and 150 for my rental, right? So that's it. Now, do these numbers have to add up to 8,000 since we're subtracting the 2 from the 10? Do they? No. And the reason is we said over here that we have this, we used it for personal use. So all this changes how things are calculated out over here, right? And now can we click close? So this is all good. Click close. And there it is. There's our vehicle. Return to list, close, and if we go down, here's our auto expenses. And if we look at our Schedule C, car and truck expenses. Pretty nice. Now, let me go through that again without all those error messages. I want to make you guys aware of those errors as much as I can because it does make things a little confusing and frustrating, especially when we have an office full of people that want to get things done quickly to get nothing but error messages when they're in there. However, if we do it the right way, we could just click on Vehicle. There's our Ford. We'll just do a new asset. This will be a Honda. Why not? Gas powered. We'll enter how much that was. 16. We'll answer our questions. I'm going to enter both, no makers, miles and expenses. Here's where we can enter our total and our commuting and just make sure that these add up to the correct amount and life will be okay. We'll do 550 for this one and 550 and 2 grand. And yep, we have receipts and logbooks and everything we need. So we'll click close. There we go. Return to list. Boom. It's all done. Okay. Now, I want to finish with the quick and dirty method of entering a vehicle. If all you're going to do is enter a vehicle on a Schedule C, and all you're going to do is report mileages and those kinds of things, what you do is you scroll down to Part 4, and you find this little guy that's lost his head, right? So what you do here, be sure to check this box. This gets missed a lot. If you're going to use this form here, be sure to mark this box. Otherwise, things don't pull in quite like they're supposed to. And you can enter directly on this. This is pulling from my asset that we just entered, but we can enter directly on this form, and all this will carry to line 9 on the 1040. So this is like the quick and dirty. I will say, though, that this way, you're not able to track year to year. And if you enter into depreciation, this pulls forward, and you can see this every year kind of stuff. So if it's involved in tax planning and you want to look at things over the course of a few years, then directly on the Schedule C is probably not the best way. And if you want to split mileages up between schedules, you definitely have to enter that in our depreciation manager. Okay, that is pretty much the whole process for entering an asset into CrossLink. All that's left now is to verify things are good to go, and then we can print, and we could even do a remote sign or a document. We can email it out, and obviously I can't do that with my install. But after that, we transmit it off to the IRS. Now, it's worth saying again at the end of this that what you want to do is fill out the client data worksheet first. You want to move into any income source forms, so you're going to be adding W-2s and 1099s and those kinds of things. And then move into the schedules. Add the schedules and add your assets in that order, and everything will display the way you need it to, and you'll get through things a happy tax preparer.